Virgin Galactic's shares jumped up over 25% in one single day. In this video, we're going to take a look at space, determine why we saw such a massive increase in one day of trading, and determine if we like this company right now at this price point, or if we believe it will continue to surge higher over the next few weeks and months. We're also going to take a look at this company's future growth potential to determine if we believe this company will one day become profitable and reach new heights as the years go on. So thank you for tuning in, everyone. As you know, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy, overall stock market performance, and go over any major stock market news and headlines, like we're doing today with this major news that we saw Virgin Galactic, ticker symbol SPCE, jump up over 25% in one single trading day. And on the day today, shares continue to rise up 1.7%. So this is a very interesting company. They are trying to be the first ever space tourism company on the market and in the world. And what we saw here was a massive jump up in share price. And in this video, I'm going to go over why that happened over the short term and what their future goals are for the company to grow and sustain operations over a longer period of time. So please hit that like button and subscribe as we jump into Virgin Galactic. So their shares skyrocketed over 20% in one single day. We saw at the end of Monday, shares closed up 25.8% for that one single day. And essentially, Virgin Galactic is pre-revenue right now. This company still isn't operating and actually generating revenue from their core business just yet. They are still in that research, development, and testing stage as of this point. And this company is, of course, trying to be the first ever space tourism company. And they want to offer space flights that may cost around $250,000 a piece. So right now they do have a lot of deposits. There seems to be a lot of upward momentum for the company, but we'll actually have to see after a few more test flights if they can follow through and get people in the air very soon. So why we saw such an increase in the short term was because two different sets of analysts, one coming from Bank of America, have a glass half full perspective when taking a look at Virgin Galactic. They believe this company is an innovator in space technology and that they will be able to tap into that space tourism industry as a market leader. We're also going to take a look at some key points about these two analyst reports that help lead investor confidence and a massive spark in share price, and go over this company's revenue generating activities, take a look at some of Virgin Galactic's price targets over the next 12 months, and then we're going to end off by taking a quick look at their key financial statements. So the two analysts always bumped up their price targets and actually put a buy rating on Virgin Galactic. That, of course, helped investor confidence, and which could have been a big point in leading that massive surge. Analysts at Bank of America initiated coverage on Virgin Galactic on Monday with a buy rating and a price target set at $35. Compared to their share price right now that sits just under $21, still a lot of potential upside growth for this company over the short term to hit that Bank of America price target. So while Virgin Galactic is not yet operational, the company is gearing up to begin serving customers in early 2021, which has a lot of optimism that they're going over a few more test flights to end off this year, and they believe by early 2021, they can start getting consumers up in the air. That is their number one priority. Virgin Galactic, like we mentioned, saw a 25% jump to over $20 in share price after this news was released. They also believe that the space tourism industry will grow to a market hit of 1.4 trillion with a T, by the end of 2030, which currently only sits at 415 billion. So they believe the industry itself will more than triple over the next decade, which is rapid growth, and they believe there is an upbeat future for Virgin Galactic space flights. So although the company is not flying passengers right now, there isn't really revenue coming in. This company continues to sell out shares to generate the cash flow to maintain business operations. They are being traded below their 50-day and 20-day lines, and we're going to take a look at the future of their commercial flights. So the stock has been soaring, and they actually have two more test flights that are scheduled to start after October 22nd. The first flight is going to have 2 pilots and contain some NASA payloads, and the second flight is going to have 2 pilots and 4 people in the actual crew to help maintain and test the passenger experience. So they're going to make sure that everything is ready for consumers in the spaceflight during this test. Some other key points to take a look at for this company and some future potential revenue growth that is still years away but has high potential to earn this company massive amounts of revenue is hypersonic travel. So although they are mainly going to be a space tourism company right now, they have plans to disrupt the airline industry and take space planes across the globe at 3 times the speed of sound in order to get individuals across the globe extremely fast. So even though this is far off down the future and there are some competitors working in this space, Bank of America analysts believed Virgin Galactic's unparalleled vertical integration manufacturing system gives this company an advantage in this market as well. If we jump over to a slide from their latest investor presentation, it kind of goes over this high-speed technology roadmap. So there are plans to help people travel at extremely fast rates of speed. In the short term, what they're working on right now is some concepts and design development, of course. They're still in that initial planning and prototype stage. Medium term, they're going to get into more detailed designs, commence first manufacturing, like actually start to try to build, and of course, do some tests. Then, of course, in the medium term, they're going to start signing up people to use these specific flights. And then over the longer term, of course, they're going to have some vehicle production and entry into service where this can be a full-time service and a revenue-generating activity for this company. Now we're going to take a look at some price targets. We took a look at this massive jump. We understand that it might have jumped because of new analyst reports, especially from Bank of America, putting out a buy rating, setting a high price target for this company, which of course may have led some investor confidence and helped with the short-term gain. And we saw that today, the day after this long gain, the shares have not declined. If we take a look at a longer-term perspective over the past year, we've seen Virgin Galactic soar, then fall, soar, and then fall. So it'll be interesting to see if they can continue on this pattern and on this uptrend, or if we will see another, back to the average where a big increase is followed by a sharp decrease. The market overall itself is in the red today, so the fact that Virgin Galactic is in the green shows that some investors are still purchasing this company right now. If we take a look at the first price target for this stock, this is from MarketBeat. Over the last 180 days, the buy rating has been maintained. They see a price target at around $26.75, which represents close to a 30% potential upside from the current price point today. All 9 analysts surveyed put in a buy. The second analyst report from CNN Business shows an average price target for the company 12 months out at $24, which is a 17.4% upside from their current price point. And our last quick little view of an analyst report shows the average price target coming in at $25.43, represented as a strong buy with a 22% potential upside from this current price point. Compare that to what Bank of America stated earlier, that they set a price target at 35 and also slapped a buy rating on this company as well. So overall, every price target that we're seeing, of course, analysts are just estimating. There's no way to be certain that the stock will actually hit this price target within the next 12 months or ever. But analysts are very optimistic. They believe there is a lot of upside right now from the current price point at around $21 a share. And they believe that this company over the next 12 months will see significant upside potential. Now we're going to jump into their financial statements. This company right now, like we've already mentioned, is not generating any revenue. They are still in the pre-revenue stage. You can see here in the past 12 months, they've only brought in $1.6 million of revenue. In the whole year, 2019, they brought in $3.8 million. Compare that to their net income, the bottom line of the income statement. They are posting insane losses, losing $210 million in 2019, and over the past 12 months, posting a net loss of $246 million. So this company is not bringing in any revenue just yet. They are still in that pre-revenue stage, but is estimated after the two more test flights occurring at the end of this year, they're hopefully by the end to middle to end of 2021, they can start getting some consumers in their spacecrafts and help generate some revenue for the business and bolster up that top line. Compared to their balance sheet, they currently have total current assets on hand of $415 million, and a majority of that is in cash and short-term investments. If we take a look at their total current liabilities, they only have $113 million. Compare that to their total liabilities of $136 million. And why that's important is because this company does not have a lot of long-term debt. Only $21 million of capital leases, and overall around $23 million of long-term debt. That's not a lot. A lot of their debt, of course, was within the short term, but this company is not very, although it's capital intensive in order to build and actually do the infrastructure in order to grow the business, that isn't shown right now on their balance sheet. If you take a look at total current assets of $415 million, that is more than enough to deal with all of their short-term debt and their longer-term debt as well. So this company can pay off all the debt on the business and maintain operations very nicely. And of course, a majority of their current debt is unearned revenue right now. And overall, for companies, we like to see growing equity, but for a company like this, equity numbers are going to fluctuate. You can see here, total equity in the company was very low in 2018, saw a massive surge in 2019, but now of their latest report has once again decreased. So there's going to be a lot of fluctuations with equity over the short term, over the next few years, until this company can reach a point where they're consistently profitable, growing assets and reducing liabilities. Taking a look at their cash flow statement, like we've already mentioned, massive net losses each and every year. Cash flow from operations is obviously negative. They don't really have any operations right now that are actually bringing in any cash flow. All their money is being used to operate the business, so cash flow is actually leaving the business from operations. They spent $21 million on investing activities, paid down very little amounts of debt, and have brought in $531 million from cash from financing. And of course, you can see here, they issued $581 million of common stock to the public, which is what sold, and that's where the cash is being used right now to help keep the business afloat, because as you can see, they were losing a lot of money each and every year. So overall, interesting financial statements. This company's pre-revenue right now, so nothing too crazy. Everything we would expect from a company that isn't generating any revenue right now. Massive losses each and every year. This is an extremely high capital intensive business, massive R&D expenses. They are building spacecrafts. That is not cheap to do. And this company is selling shares to generate cash flow in order to, of course, fund the business, which is very normal to see. Overall, Space is a very interesting company. It gets a lot of hype. We've seen massive increases and decreases in the stock. At one point, shares surged rapidly, reaching up over 400% at their all-time high. And then we saw that followed by a massive decline of over 70%. And since that point, we've seen kind of a slow growth with some peaks and declines along the way. Interesting company to hold on to if you're a bull on the space tourism industry and you believe that this market is only going to grow over the long term. This is really the only company on the market that's publicly traded for you to take a look at right now. Let me know your comments down below. For me personally, I will not be investing in Virgin Galactic. It is not the type of company that I hold in my portfolio, but I do appreciate everyone who likes the company. Share your thoughts with me down in the comments, and I respond to every single comment I get. So I appreciate you tuning in, and I will see you in tomorrow's video.